Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Ethereum in its token ETH. None of the content is financial advice. Right now, the price of ETH is now above 4K. It was down quite a bit at around 3,500, 3,600 level, between 3,400 and 3,500 level not too long ago. That is, again, if you look at the daily charts instead of the weekly chart, again, you can see late Friday price did go sub 3,500 for a while. Now bounced back to 4K. Coming back to the weekly chart, again, it's still, the price is holding close to that 20-week simple moving average that is coming in at $3,600, and 21-week exponential moving average at $3,700. So price is well above that level today, being Sunday, end of this week. If the price stays above this level, which as of now looks more and more likely, that still leaves ETH in a bullish uptrend, again, as estimated by this green line over here starting 2022. Whenever the price was above the green line over here, the slanting green line, that is, was in a great buy zone. From the Fibonacci level perspective, again, one key area to look for is this $4,039. Again, we are about $35-36 below this level. That's the 0.786 Fibonacci level drawn from the 2021 high and the 2022 lows. So let's see if the price action stays meaningfully above this level. That could be a great area of support next week. We haven't seen a weekly close below the $4,039 level since the price kind of rallied above 4K, that is in mid-August 2025. So again, couple of months we have spent, more than couple of months spent, ETH has spent above this level, at least at the weekly closes. As of now, as the candle bodies are slightly down over here, let's see, that is the daily close. If today's daily close would be above that $4,039 level, that would be kind of interesting. Coming back to the website, again, this is the website, cryptoweeklies.com, link on the bottom of your screen. That's my own website. All of these indicators are created using machine learning, statistics, and AI based techniques such as ARIMA, regression, all of them easily understandable using public data. Again, no opinion or hype in here. Coming to the YouTube channel, again, all of this content is tied over here from the website itself. So if you want to check any videos, so for example over here, if you want to check any Ethereum related claims that were made using these AI models that are machine learning models that we have created, you can check them all using this search button over here to see if whatever I'm sharing now is different from what I have shared before. Coming to the, again, this is the screener over here. All of our model aggregated together says that base case for Ethereum is close to 5,900, bull case slightly under 10K. Coming to the machine learning based price interpretation of where we are, these are the weekly price action of ETH since 2017, and price is forecasted using seasonal ARIMA based forecasting technique. This is again not prompt engineered model. This is developed using statistical rigor and analysis. This as well as machine learning technique. This model says that if there is a non-euphoria bull run peak that is within one standard deviation or 68th percentile bull case in the next 3 months ending December 2025, the price ceiling for ETH at a weekly average is at around $5,700. That's what is forecasted using this price data, statistical measures, and seasonal ARIMA based machine learning model. You can check how this is calculated over here using the description to identify what is a bull case, bear case, and base case. Again, for this week, the bear case was a weekly close below $3,800. Again, we are above that level. That means the bear case as of now has not panned out yet. So we are again closer to this base case at around $4,100. If that pans out for this week, that would potentially bode well for this bull case later on. The Euphoria case is this orange line over here. Orange line is the 2 standard deviation 95 percentile bull case for Ether. In that environment, if the bull market concludes in December 2025, the weekly average price forecasted is at around $7,000. And one caveat that I forgot to mention is these forecasts are weekly averages. So the candle bodies or the weekly high could be 10 to 20% higher than that. So for example, in November 2021, the weekly average for that week of all-time high was around 4,700 roughly speaking, whereas the all-time high for ETH was at around 4,900. So that's the divergence that's the tolerance level that I wanted to mention. So for example, over here August 2025 also the weekly candle bodies did go as high as about 5k, whereas over here the weekly average price was never higher than 4,550. so again leaving that tolerance of about 10% would be the top of channel at around $7,700. That's the 10% margin. If we were to put 20% margin, that would be at around $8,400. That depends on how the blow off top occurs for ETH. The regression based fair value, again there are two regression based models. This is the polynomial non-linearity model, again trying to identify the non-linearity aspect between the price and time, again especially true for highly volatile assets such as crypto. They don't move or their fair value essence is not captured in a straight line rather than a polynomial regression based what's a fair value. So anytime per this model price is above this pink line, that phase for ETH is technically a bullish phase like it was for briefly in August, but below this 1 standard deviation residual drawn from the fair value, this green line over here, that's when the great asymmetric buy opportunities exist for ETH. Right now that line is at around 3,300. If the price falls below $3,386, that would be considered a deep value zone per this model, whereas the $5,500 level is where the fair value for ETH is per this regression based model. If we visit the top of the channel like we did back in 2024 3 times, in March, then June and in December, this is the 1 standard deviation residual drawn from the upside. This is where the 68th percentile peak usually occurs for ETH. That level for ETH is at around $8,500, again kind of confluent with that Euphoria case per the machine learning model, keeping that 20% tolerance. So this is one major area of confluence, first at around 5,700, second at around $8,500. The second regression based model is this linear regression. This is again for assets which have been around and have a consistent recognition such as Bitcoin and ETH. We do have a linear regression based model where this one line in sand helps identify whether the price is in an accumulation phase or let's say in a bullish uptrend. Again this line in sand right now is at around $4,000, roughly speaking $4,137, again as confluent as we get with that other model that we discussed, where the price ceiling in that machine learning based base case for this week is close to that $4,137. In this model also, if we were to go by this model, again this model is slightly more optimistic than the other models. Again you can see that the divergence between the 2 standard deviation dotted red line over here has again in 2018 the price was almost 2x of more than 2x of the dotted red line. The peak was at around $1,400. The linear regression based overvaluation was at around $675, whereas in 2021 the highest I believe we went over here where the peak was at around $4,100 at that point, and the dotted red line was at around $2,700. So about $1,400 difference. This time around there is a high chance that this dotted red line, the price does not get to that level, so that comes with a caveat, but that is again kind of a moon boy target for ETH if it were to go to that level in 2025, late November, early December. This model again right now, the risk level is at one has cooled down quite a bit from 0.66 to now at around 0.53. All in all, if the price action were to go to that forecasted peak scenario, the medium to optimistic case for ETH is between $7,700 to about 0.65. That's where the 10k meets. So between 0.5 and 0.6 is between $7,700 and $10,000 for ETH. Coming to the time weighted average price analysis, this model did identify 3 distinct points in this bear market starting 2022 where the price was below the time weighted average price, the last iteration being April 2025. We did make a lot of videos related to ETH and how it is in a time weighted average price based accumulation phase back then. Right now this line in sand is more going to be useful in the later half of 2026 if there is a bear market in 2026 for crypto, like it usually does every 4 years. You can check out 2022. This is Bitcoin, but you can do the same for ETH. So as 2022, again 2018, this is from the yearly open. The price towards the year end was negative 87% in 2018, and 2022 negative 69%. So you get the idea. 4 years later would be 2026. So this line could help identify what is potentially an accumulation phase for ETH in that bear market. But for now, this line also does a dual purpose, where if there is a topping pattern, the color code goes into the shades of orange, yellow, or orange or red. Right now we have left the yellow territory and then are in this green territory where again the price has either again the top is behind us, or again we are in cooled off territory. Per ETH's price action, the 20-week simple moving average price risk for ETH again is demonstrated in 2 models. First is this risk color coded model. Right now it's at around 0.4 risk, and the top the highest that ETH went this time around is at 0.86 risk. If let's say we visit these risk levels one more time, the 0.8 for ETH is around $5,500 as it stands today. Again, the lower bound at around $5,700 could be materialized in if that 20-week simple moving average risk is 5 to 10 weeks ahead of us. If we look at the same 20-week simple moving average price risk in terms of what is happening to ETH, that is in blue, and in Bitcoin in orange. Right now the risk levels again have cooled off from that 80% or 86% that were for ETH in mid-August. Now they are gone in this low risk regimen, slightly below the 0.4 risk level. For Bitcoin, definitely below 0.4 risk as it stands today, close to 0.3 risk. And whenever the prices are in this low risk or lowest risk, that's when historically speaking great dip buying opportunity occur for these assets. Again, not financial advice. If we look at current social sentiment has gone or retraced back from this bullish phenomena from positive 86 to now at around middle of the road 51% bullish. All of these indicators, by the way, available on cryptoweeklies.com, and they get updated every day to react to the latest price action. So the one that we just saw was crypto TLDR. The ROI metric is available over here. The heat map we'll discuss right now is all of this performance over the last 24 hours. Again, slightly recovery, but over the last 7 days, most of the assets are down. Over the last 30 days, again, most of them are down, and 90 days, a handful of them, such as BNB and ETH, are up. ETH is still the number 2 rallying crypto in the last 90 days, up about 21%. Now we look at some of the popular narratives as established by this narrative word cloud. And they are again still over the last 7 days, most of the asset class is still bullish, although over the last 2 to 3 days there were a lot of bearish narratives. So the size of bearish narratives is increasing, but it has not eclipsed the bullish momentum. This is derived from the last 7 days worth last 7 days discussion related to crypto on platforms such as YouTube and X. Again, Ethereum has a meaningful presence on this narrative word cloud, but again, Bitcoin is still holding most of the attention, apart from some altcoins here and there such as Cardano, XRP, Hedera, and Solana. So coming to what it all means, as this banner over here says, how this risk-based models are calculating this estimated bull run target for ETH. Again, you can check it over here. Right now the price is, again, as this gets updated every 24 hours. We ran this today morning. Back then the price was $3,800. The weighted risk for ETH as it stands with respect to the regression risk, time weighted average price risk, and SMA risk is at around 0.37. You can read up over here how these risks are calculated in a conditional assessment of what these individual models are. So for example, the conservative mix where weightage is 50% to regression risk, time weighted average price risk model is 30% risk, and 20% around 20, for the 20-week simple moving average. The base peak forecasted using these risk-based models is $5,900 for ETH. The bull case is around $9,800, and the moon boy territory, as mentioned earlier, is anything about $12,000, kind of peaking at around $14,790. So that's the base case is about 1.5x of the current price. The bull case is 2.5x, slightly over 2.5x, and the moon case is slightly under 4x of the current price. With that, I would like to conclude by saying the base case right now is heavily confluent up among several models between $5,500 to $5,900. The bull case stretches from $8,500 to $9,800 for ETH, and anything about $12,000 is a moon boy or a 3 standard deviation move for ETH. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.